Good day. I'm Martin Gago with Market Radius Research. It's Wednesday, September the 28th, and we've got CEO Fred Dugre of H2o Innovations. H2o is a municipal and industrial provider of water purification products and services. H2o just released their fiscal 2022 Q4 and full year financial results, showing another year of both strong organic and acquisition growth. We've got Fred here to discuss the results and the current outlook for the company and the industry. But please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Fred, thanks a lot for joining us. And let's have a quick overview on the quarter and the year.
Sure. Well, thank you very much, Martin. It's good to be back and present this great quarter that we just had, ending June 30th. So for us, it was truly a remarkable year with, as you noted, amazing, incredible growth. Growth coming from acquisitions that we completed. So we completed 3 acquisitions in the last fiscal year, but also from the sustained organic growth we have. This is something that we have been dreaming on for a number of years, and now it's happening, almost 18% of organic growth. So growth, not only at the top line, but we have been growing also very, very nicely our EBITDA line. So the adjusted EBITDA has increased by almost 24%. So it's really moving in the right direction. On top of that, and that gives us also great confidence for the future, if you look at the backlog has also increased significantly, almost by 60% year over year. So now currently stand at 163 million. So obviously for the coming quarters, if you look at this backlog, including projects and O&M, plus the recurrent business we have from the specialty products, I would say it gives us pretty good confidence and visibility for the coming quarters and how we're going to continue growing the business.
Now, Ed, I'm curious with your backlog, is it, are you signing longer contracts? Or they're just more like it's still the average contracts, I don't know, let's say 3 or 4 years and you've just got more of them? Or are they kind of the same number of contracts, but they're 5 or longer years out, which makes the backlog bigger?
Well, it's a little bit of a combination of both. If you look at one particular project, for example, the one in the Gulfport, Mississippi, so it is our single largest operation and maintenance contract. So we had renewed this project for 4 years, an additional 4 years. It brings an additional 55 million to the backlog, but we have significantly increased the scope of work of this single project. So the duration itself has not necessarily, expanded, but the contract itself is way bigger. And then we have the option also to further renew this project for up to 12 years. So, but only the 4-year renewal currently is into the backlog. We don't calculate up to 12 years because there's still options to go. But this is an example. But we got also other projects of 5 years that have been renewed, of smaller ones. We do have also a better diversification also into our project backlog, the one coming from WTS. There's more industrial than municipal, and this is something that we're starting to see also ramping up.
On the O&M side, that's largely on the municipal side of the business. You don't have that much industrial O&M, do you?
Very little at this point, very little. I would say it's a trend that we're starting to see more and more to have industrial companies looking to have partner operating their assets. So it is a trend that we're starting to see more and more. But you're right, right now, into our portfolio, it's mostly municipal.
Gotcha. All right.
And this growth is not happening by chance. Anyhow, it's really coming from investment we have done in growing our team with more resources. We added quite a lot of people last year to grow sales in the WTS team and specialty products. People in the US, we added people also in Southeast Asia, in India, in South America as well, and Saudi Arabia. So all these additions are definitely starting to pay a year later. We further expanded our facilities for manufacturing of chemicals, both in UK and Cheshire, where we added additional capacity to make powder in-house, but also in California, where we revamped and gained additional space for manufacturing as well. So also we did that from the demand we're currently seeing on our products. So we want to be able to cope with the current growth that is coming up. And we're very happy with these investments. We purchased additional equipment for the operation and maintenance because of scope expansion and renewal, as we just said. We got ourselves listed also on the TSX. So this was another move that we have done this year that is giving us additional visibility to a larger audience, let's put it this way, and hopefully more ownership from institutional shareholders and diversified investors. In H2O, the ESG is not a trend, but something that is really changing the way we are approaching sales, the way we are even developing our products, the way we are currently managing the business. So really in H2O, we're taking that very seriously, and we're starting to see a big shift coming from our customers. Our customers are looking for more green solutions, for technologies and solutions that will help them to reduce their water consumptions, to reduce their energy consumptions related to water production, reduce their waste and all that. And currently we have many products in our portfolio that are make this possible. So we have right now an amazing traction on our product.
Well, on ESG reporting, and a lot of your clients are large organizations. They have, like, part of ESG reporting is you have to report your carbon footprint and so forth, and your more economical and less bulky concentrated products helps reduce their CO2 footprint as well, right?
That's right. That's right. So the super concentrated chemicals we use, we call it the SpectraGuard, which is a green chemistry. We call it green because it's not made of phosphate-based product. It's made from another polymer. So this green chemistry comes into also a super concentrated formulation, allowing us to reduce the water footprint of the product itself by 11 times, but also reduce the associated freight costs, right? So if you move less material because it's super concentrated, the cost will be less, the emission will be less, the storage will be less 11 times. And we have seen now, we're seeing amazing traction for this product as we speak.
All right.
And as I said, in H2O, the ESG teams for us is something that is very tangible. So we want to walk the talk in a sense that we decided to implement a minimum wage of $15 an hour across the board for all our employees. And there was a minority of employees, but that were not, making this $15. So we came up with adjustments. These are mostly related to operation and maintenance. And we're happy to do that, and we're doing it with the perspective also that this will allow us to retain more the talent in a period where employment and the labor market is quite challenging. So we'll be able to retain more of the talent, attract the right ones as well, the one that will be motivated to have a good job and grow with us, so that we can train them better, and ultimately that should improve also our health and safety scoring cards. Talking about health and safety, we further invested also into that function as part of our ESG objective also. We also invested into the implementation of a new software, SOSPIS, to allow us to track down the performance and how we can improve on different things on that topic. So great performance over there. You look at
Fred, on the ESG and the minimum wage stuff that you're doing, a lot of that isn't on the O&M side, and that's to municipalities. And basically, you're hiring people in the city to do the work for them. And do they view that as kind of a positive thing, or do they really care about like how you're kind of treating those sort of lower level employees?
So far, the feedback we're receiving, again, it's relatively new, was very positive. I mean, let's put it this way: do you want to see your public utility, operated by the cheapest supplier, or you want to deal with the supplier of choice that will make sure that is paying his employee properly, is retaining them, is training them, they're safe, and that provides and ensure the quality of the service that we provide to you? So I would say it speaks to the obvious. If we are a good employer, if we take care of our employees, we're going to take care by extension of our customers. This will drive value. This will drive the long-term relationship and ultimately the adjustment in price on our contract. That's the bet we're taking. And so far, the feedback we received was very positive. And this is the trend we want to be perceived in the industry. And I think, it will be a matter of time before we recuperate the investment we have done. It will happen over time as CPI adjustment will come at the renewal stage of each of our contract, but I'm very confident that it's the right step we're taking.
All right. And when you get like a lot of people think ESG is all the environmental, but the S is social. I believe it's social. And then the G is governance. So that's all kind of adding to those ESG scores, which a lot of, especially institutional investors, are taking seriously.
That's it. And I take it very seriously too. Again, we want to be perceived as a partner of choice in front of our customers. And to do that, we have to be an employer of choice. So the social aspect is very important.
All right.
Rapidly numbers snapshot for the Q4 itself. Again, I like to look at H2o as a 12 month kind of company because it can be a little bit lumpy from one quarter to the other. But look at it. I mean, in terms of growth, the fourth quarter was just phenomenal with 31% organic growth only. So 13 from acquisition from the previous quarter, but 31 from organic. As I said, this trend that we're seeing into the specialty products, the green chemicals, the green chemistry, products that enhance their saving on energy is not a trend anymore. It's really a way of doing business. So our clients are shifting gears in a big way. And this is showing on our sales. The gross profit margins, remain very decent. There was a little bit of fluctuation. Obviously, the price and the pressure on material is there and salary as well. But I'm relatively confident that in terms of material, things are starting to slow down. We saw already a decline into the price of steel, for example. It already pulled down by 40% over the last few months. Same thing with HDPE and a type of plastic that is highly used into our industry. We saw this also decline by a factor of 35% or so over the last few months. So these are moving in the right direction. That should help us and enhance, our margin profile in the coming quarters as well. EBITDA has improved year over year. It has improved by 53%, increase. So this is a big move from last year. 1.6 million of adjusted net earnings at the end of Q4 and 163, as I said, at the end of the Q4 for the backlog.
So I'm noticing, like, sorry, go back a slide here. Like, while your gross margin dropped a bit, you're actually improved on the SG&A. So you're finding efficiencies on the sort of corporate side of stuff. And then with the revenue growth, it's all seems to be sort of working out in the right way.
That's right. I mean, even though we kept investing into the SG&A, as I said, because we hired many sales people to support sales, in percentage, it is going down. So yes, we're scaling up the business, gaining efficiency, and we're happy of that. But we're going to continue to invest into our sales for sure. I mean, we have so much traction. The indicator into our industry are very favorable. The demand for water is just getting bigger and bigger every year. So the investment thesis in water is there. And for us, it's time to invest is now, and we want to capture it. So
on the analyst call this morning, I forget who it was. Someone made the comment that you're getting your biggest ROI off of hiring new salespeople. Is that can you sort of elaborate on that? There's just so much demand out there. You're just trying to scoop up as much as you can.
Exactly. So, and we saw it in the last year. I mean, we invested, for example, into sales and hiring people into key geographies. Like we had someone in South Pacific, Asia, South Pacific, to cover the area between, I would say, Singapore to, let's say, New Zealand. And it paid off, like within 3 months, coming up with large orders of chemicals and specialty products. So the same happened very rapidly and efficiently in South America as well, covering new geographies, covering new areas with tremendous potential. So that's why Mark, our CFO, said that this morning. It's probably the most and low risk return on investment we could have. And
you mentioned Asia and South America. Are there any geographic regions that you're kind of most focused on, or you see the biggest growth opportunities in?
Well, right now it depends on the business pillar we're in. If you look at let's say the business mix on the following slide, WTS, our water technology and services, will remain exclusively North America. So Canada, US, and US, as you know it, tremendous problematics associated to their infrastructure. They need to invest. It's aging. So this trend will remain pushed also by additional industrial customers looking for alternative to reuse their water as well. So this will continue. Then for the international market, the specialty products, yes, we are mostly and highly investing into areas such as all the Middle East, where they're investing massively into construction of new desalination plants, where we can provide them chemicals, components, and other specialty products. Same thing with, I would say, Middle East, North Africa, the MENA. Then all the South America, because mining is going very strong there as well, and will remain and still continue to go strong. So this is an area that we're trying to focus. And finally, the Asia South Pacific, where there's a lot of country also that are investing into water and water reuse. But these are the key areas where, in terms of focus, we will have in the coming year for the specialty products group. And home operation and maintenance will be exclusively in North America as well.
And so you're saying that your WTS is strictly a North American business?
Yes. So we're doing
okay.
Yes.
So when you're in the specialty products supporting Middle Eastern big desalination plants, you're not trying to get their sort of CapEx equipment on the building of those. Those goes to other guys. You're staying focused on.
Usually it's a local OEM that is bringing the equipment, then we're bringing the other components and the consumables.
Gotcha.
It's way easier in terms of logistics, project management than to do the whole system.
Yeah.
And the growth there, I mean, I think the chart speaks by itself. If you look at the growth year over year, I mean, 40% growth, that's significant in terms of increasing in sales. The KEGAR also on revenues, I mean, 16%. And if you look at the KEGAR on EBITDA, just at EBITDA, 44%. So, I mean, we have been improving the business significantly over the last 5 years, showing that we can scale up the business with a combination of organic growth and acquisition growth as well. And through our business model, between the 3 different business pillars, we're trying to maximize and retain as much as we can our customers. This is into our mantra. This is what we're trying to do as much as we can. So in North America, for example, when we deliver the water treatment equipment, we're trying to sell them the chemicals, sell them the consumables, and make sure that we retain this relationship, translating into high recurrent revenues. That's the 84.9%, 85% that we're talking about. So this is an area that we're going to continue to focus in the coming years for sure.
All right.
Now, if you look at each of our business pillars, there's a couple of highlights for the O&M group. I mean, there was obviously, as I said earlier, this contract renewal for the Gulfport, Mississippi. We did a video on that, Martin, a couple of months ago. That was a big win to be able to not only renew, but extend this contract. There was also 5 other O&M renewal. Some were in Mississippi, Georgia, New York, also from the new acquisition we have done, New Mexico, and the province of Alberta. So these were also very strategic. In our business, you know, it's not only important to win new customers, but also to make sure you keep the existing one you have. So renewal is a big focus for us. We won also 3 new operation and maintenance contracts in Mississippi, Vermont, and Rhode Island. So this is big because in itself, the 3 together could represent in itself a small acquisition. You know, it's multiple $1 million revenues we're adding through these 3 contracts. So it's started to show up very nicely into our growth as well. And altogether with the renewal, we have been able to increase the O&M backlog only to 126 million. So this is a big addition.
Fred, sorry, going.
No problem.
One of the things note in your financials, your capital expenditures this year increased a lot. Part of it is you're building out your factory in the UK, I believe it was, and then also in the Gulfport, I think. And then as well, with these new O&M contracts, does it require a lot of upfront investment to get them going, or is it
Yes.
Can you explain that?
That's a good point. So the expansion of Gulfport contract, you know, combining the management of the fleet, plus, as you pointed out, the 3 new ones that we got. So imagine when you enter a new project, let's say for the city of, you know, of Laurel, Mississippi, we had to purchase some equipment to get going on this new project, right? So you buy pickups, you buy backhoes, you buy trucks. So you buy all that. And this is your upfront cost that you deploy once, but then that you're going to recuperate, over the period of the contract. So yes, there was some upfront cost starting these new projects, including the scope expansion. So this is why it was a little bit more heavy this last year on the CapEx side.
All right.
But it's all for good news because it's grown. The other investment we have done is to buy, and this is not small, but we announced the acquisition of two companies that we purchased in the state of New York. So JCO and Environmental Consultants were two companies that we complete transaction in mid-December. In itself, these two together adds another 200 customers, municipal and industrial customers, all along the Hudson River. And we have been able to already capture multiple synergies with our WTS group, synergies for SCADA and controls, as well as a project, actually a large project we have been able to secure. And this is something we announced last week. Among the $12 million of new projects we announced last week, there was one significant one for an aquaculture project. So they're growing fish. And through this, there's a tremendous amount of water that they need to recycle and treat. So this is very tricky. So we'll be providing a first of a kind of membrane filtration water reuse facility for this aquaculture production. If you look at WTS, our capital equipment business, it was a fantastic year. Where we have seen growth, but also, as I said earlier, a very nice diversification with a greater number of industrial customers. So this is something that we continue to push. The backlog is very healthy as we speak. Now it stands at 46 million. It was at 36 at the end of June, but after the announcement last week of an additional 12 millions, it stands at 46. So all the indicators are green. It's moving in the right directions. We'll see growth in the coming quarters for that business line and continue to see margin improvement with this new kind of business mix of industrial and municipal customers. So this is quite exciting as well. On the specialty products, we said it, the momentum is there. We have invested into these divisions to see amazing organic growth. I think the chart there is just speaks by itself. Let's put it this way. When you look at the growth we had, when you look at the improvement and the growth on the EBAC as well, the earnings before admin costs, there was new products also that we developed and launched, allowing us to capture new sales and capture new customers. And finally, the maple farming equipment is growing in a big way. Growth coming from demand of our products, but also from the new quota that the Quebec province is releasing. So there's $7 million of new taps in dollars, but 7 million new taps that are being released to the producers, meaning that they will have the options to invest to further grow their production. So this is very, very good for us. Quebec is even thinking about adding an additional number of new taps to further add up to the 7 existing million of new taps. So I think, the coming years looks very good. And this was also partially why we decided to purchase Leader at the end of June. So Leader and H2o Maple combined together will be our maple division, maple equipment division, that ultimately will transform into an agri-food business because we want to be able to capture things that are outside of the maple only. So this is
I wanted you mentioned that on the call this morning as well. So you see opportunities in other agriculture or food manufacturing businesses, and that's so you're not really constrained to the sort of northeast of North America, and then you can have opportunities to grow beyond that.
I think the expertise we have built and designed into sugar concentration, because this is the area of expertise. I mean, we're concentrating maple sap into a concentrated maple sap that is accelerating or reducing the energy cost. So our expertise we have developed into concentrating a solution with sugar can be applied to other markets. Microbreweries, cranberries, any kind of berries and juice can use our expertise, I would say. On top of that, the agriculture aspect is in tremendous need for water, right? 70% of the water produced in the world goes to agriculture. And most of this agriculture, well, 40% of the irrigation method in the world is using flooding irrigation to flood large fields with water to then, be able to plant and grow vegetables or food. So it is by far the most inefficient way to distribute water, but this is how it's being done. So I think, we can help a lot this industry by bringing complementary technologies to improve irrigation, to improve management of the water, to recycle the water for the farmers. So use the wastewater for municipalities that we can recycle and distribute that water to farmland. And this is an area that we expect sustained growth. You cannot have food security if you don't have water. Let's put it this way. So for us, it's crucial that we keep investing, and this is why we're taking steps towards this transformation into an agri-food business for the maple division.
All right. And I want to switch to the Genesis side. That's largely the chemicals and the anti-scalants and that sort of thing, correct?
Correct.
And could you, what kind of, I don't know, market share do you have, or how big is, because that's, I think is one of your higher margin businesses. It seems to be a real differentiated product there. How much opportunity is there in that market for you to grow? So
PWT and Genesis together do not have 10% of the overall market internationally. So we are like between, I would say, 7 to 10% of the overall market, which is still growing because there's a greater number of installations, right, every year being installed. So we're barely catching up with new market. Most of our expertise goes, yes, to replace existing one and replace competitor, but mostly goes to new infrastructure being installed. So it's such a big market that we're far from seeing an end to that right now.
And are there also opportunities for new products, like some areas within that overall market where you don't have a product currently and you can still more product opportunities?
Yeah, we want to remain focused though towards the membrane expertise because this is an area that we have. So our chemicals are designed to enhance the membrane performance. So to reduce the fouling, reduce the scaling, enhance the cleaning of these membranes, right? So lately we launched a new product, the Gen Mine, for the mining industry to help the recovery of the membranes when it comes to treatment of leachate ponds, for example. So when there's these large ponds with an amazing amount of water, pretty dirty with inorganic substance, they treat it through membrane filtration to filter the water, but because it's so nasty water, the membrane get clogged very rapidly. By using our Gen Mine, we can, extend the life of the membrane, enhance the performance. So these are kind of solutions and products we have developed and we're going to continue to develop in niche applications.
Gotcha. All right.
This is just to illustrate, what I was talking about in terms of trend into our industry about ESG. I mean, Taweelah is the single largest desalination plant in the world. It represents about 1% of the overall desalination capacity installed right now in the world. We have already provided the filter housing a couple of years ago, I would say 18 months ago, to Taweelah. Using our Piedmont filters. Right now, they started to use our green chemistry, the SpectraGuard. And just by using our green chemistry, they have saved 90% of their emission associated to the anti-scalants compared to conventional. So this is not small. They're saving also about 50 tons of equivalent of CO2 by using our anti-scalants. On top of that, because they use a super concentrated formulation, well, they're saving on the plastic, on the containers to carry these chemicals and these products. So another 2,500 kilos. Then we're currently working on other products, very, very neat, that are being tested in the field right now that we're about to go launch these products commercially. But products that will enhance and reduce the energy consumptions associated to the pre-filtration, to the filter housings we have. And this in itself could, just for Taweelah, allow them to save 5,500 tons of CO2. This is equivalent to $500,000 of energy savings that only Tawila will do in a year. Plus, on top of that, there's other protocols and cleaning solutions we have developed to further clean the filters, allowing to enhance the performance of the filters, reduce the frequency of replacement of these filters, saving a tremendous amount of waste and plastic. So this will be another 75 tons that we could recuperate there. So if you look at it as a whole, these are all the little things that we can do to improve the water footprint, the energy saving, the CO2 footprint of this customer. So imagine if we can replicate that to 99 other percent of the market out there. So it is a big shift that we're starting to see into our industry. And this is it in a nutshell. I mean, that I wanted to share with you. I mean, the future for us is extremely promising, I would say. I mean, we could look really briefly before we go to the water investment thesis, which is just getting better and better. You know, 22 years, almost 23 years now, when I co-founded the company in 2000, I was strongly under the impression that water will be the next gold, you know, being so precious. And I think what we're starting to see is just the beginning. Being pushed by, yes, the growing population, aging infrastructure, increasing regulation, water scarcity is impacting and touching more and more population, not only in the United States, but elsewhere. Just think about Europe this summer. I mean, they had tremendous drought. They had tremendous heat waves over there. So for us to be in that market is extremely promising. Also because we're starting to see a trend towards water positive. So industrial companies now are looking for ways to reduce their water footprint. And to do so, they need to invest into recycling. And even further, they could not only do this, but they could even finance other infrastructure to municipalities and their surrounding to overcome, you know, their deficit in terms of water. So this new way of approaching business for industries is shifting and is definitely impacting in a positive manner our business. And this is why we feel pretty confident about our trajectory, our 3-year plan. We're executing on growth, as I explained. We feel very comfortable in achieving, you know, the upper part of our target we have set between 185 to 250 million. We're well positioned to hit that, and then position the company very favorably for the following year for 2024. So outside of the pressure that we're seeing on material and labor, the growth is there, and it's just a matter of time before we really catch up on these EBITDA margins. So I feel very confident and happy about how we're performing and how we will perform this year again.
Well, just on this chart, I was going to ask you to pull up this chart. The green line for 2023, that's at the 250 million mark. So that's at the high end. Your 2022 was roughly 185 or 184 or something, wasn't it? So you've already almost hit like the base case of next year already. So presumably we're not going to see a decline in revenues. So it's where in that scope are you sort of indicating towards the upper end, or do you have enough visibility to kind of see how it'll?
I would say more in the upper end. Let's say if you take between 185 to 250 divided by 2, and you take that mark and move up, this is where we should finish. So between 225 and 250, let's say, is the sweet spot for us for next fiscal year. And yeah, I mean, we announced that plan, if you remember, in December 2020. So having able to execute on that plan in such a remarkable way is just amazing. I mean, we're hitting on each of the cylinders that we said that we will do: growth, profitability improvement, ESG. So yeah.
It's harder to forecast on the acquisition side of when an acquisition will sort of fall into place. Could you just talk about the acquisition environment right now, what the industry is looking like, what multiples are at, or sort of the trend of the multiples at least?
Well, the acquisition landscape is still pretty good. And don't forget that the water industry is still very fragmented. Even though there was a little bit of consolidation and nice transaction in previous year, it remains very fragmented. Now, I think that, we'll see a little bit of relaxation into and decline a little bit into the multiple paid. However, it's still very attractive market. It's still very attractive industry. So private equities of the world and investors will still be keen to invest into that because it's a very resilient business and very resilient market. So we could see a little bit, decline into multiple paid, but for us, the M&A landscape into the water is very positive. Now we want to remain very disciplined, as I said in previous call. So discipline, things that fits. So we're taking our time to approach transactions, but we still have a pipeline of things that we're looking at, things that were more advanced. But at this time, just to manage the growth and convert these dollars into our balance sheet to capture that is our priority number one. But I'm sure before long, we'll be able to capture something else and complete another acquisition.
Yeah, because you're really busy on just the organic growth side. Does that make it the sort of the hurdle rate to take on another acquisition a little bit harder because you've got enough enough fish to fish in the ocean as it is right now? So if you want to take on the risk of an acquisition, it's got to be really good.
Yeah, yes and no. I mean, you're absolutely right, and we're not going to make compromise on this in a sense that we want to make sure that we integrate properly our companies. I mean, don't forget the stat is still out there. 1 out of 2 integration fails. So we want to make sure that we're successful in doing it and take the time to integrate it. So that's number one. Second, we want to manage our net debt and debt to EBITDA ratio properly. We want to remain under the 3 times net debt to EBITDA ratio. So this is why we want to take the time to do the right things. And as I said, convert into cash these opportunities. But we're going to continue. It's part of our DNA. We have done many, and we're still on the look to do more. And we'll be creative to continue doing it and find ways to do these acquisitions.
All right. I think that kind of wraps it up. Any sort of final comments here before we close things?
No, I think I'm very happy and very thankful to our 1,000 employees around the world that have done a terrific job last year to pull out such growth and still, coping with an amazing growth this coming quarter. So I'm very happy, very proud of what we have accomplished and excited about the future.
All right, Fred, thanks a lot for taking the time to chat with us. Have a great day, and we'll talk to you again soon.
Thank you, Martin.
Cheers.